Welcome to Space Drift. Please subscribe and hit the bell icon for more breaking updates. A seismic shift is underway in North America's business landscape. Once the global epicenter for corporations, the US is now seeing companies, tech giants and manufacturers alike, seriously considering a move to Canada. Aggressive US policy changes, from trade disputes to harsh immigration restrictions, are driving this accelerated exodus. Canada, once valued for its scenery and culture, is now a strategic business haven, offering stability as the US becomes increasingly unpredictable. Boardrooms across America are asking, is it riskier to stay or to move? For many, the answer is clear. This migration is not just about supply chains or costs. It's a direct response to a political climate that business leaders find untenable. Canada's stable policies and open approach are forcing a fundamental rethinking of North American economic ties. In this video, we'll break down the key drivers behind this corporate flight north, and what it means for the future of American industry and jobs. Let's dive in. The tipping point came in June 2025, when President Trump abruptly ended all trade talks with Canada. The spark? Canada's new digital services tax, retroactively targeting US tech giants with billions in liabilities. Trump's response, sweeping new tariffs on Canadian goods, sending shockwaves through industries reliant on cross-border supply chains. The era of predictable, rules-based trade with America's closest ally was over, replaced by confrontation and uncertainty. Existing tariffs, 25% on many Canadian imports, 10% on energy, 25% on autos, had already strained ties. The digital tax dispute became a symbol of a larger, volatile trade environment. For US corporations, especially in tech and manufacturing, this was the final straw. The message was clear: stable economic relationships could be sacrificed overnight. Companies stopped waiting for resolution and started planning for a future outside the US. The exodus had begun. Canada didn't back down in the face of US protectionism. In response to Trump's tariffs, Canada imposed strict quotas on US steel, with a 50% surcharge on imports above the limit. This targeted move protected Canadian producers and signaled Ottawa's resolve to defend its industries. Canada's finance minister called it a necessary defense, not escalation. The message: Canada would not be bullied into economic submission. Beyond steel, Canada's digital services tax and other measures assert its economic sovereignty, challenging the idea that US tech giants can operate tax-free abroad. These policies have global support, but Canada's proximity to the US makes its stance especially bold. For American companies, Canada's clear, rules-based approach stands in stark contrast to the US's erratic policy swings. The perception of Canadian stability is powerful, making relocation seem less risky and more strategic. US corporations see a government that protects its business environment, while the American approach appears increasingly unpredictable. This contrast is reshaping boardroom calculations. Canada's resolve is changing the game. The border is no longer just a line, it's a dividing line between chaos and stability. Trump's tariffs are squeezing American companies, especially those dependent on cross-border trade. The 25% tariff on Canadian goods, 10% on energy, and 25% on autos have upended the cost-benefit equation of operating in the US. Supply chains built for seamless trade are now tangled in costly red tape. Companies face a choice: absorb losses, pass costs to consumers, or move operations to avoid tariffs. For many, relocating to Canada is the logical solution, sidestepping tariffs, stabilizing supply chains, and maintaining access to North American markets. The administration's strategy to protect American industry is backfiring, incentivizing companies to leave. Ongoing global trade disputes, especially with China, add more risk and uncertainty. In this climate, Canada's stable trade agreements and global market access are a major draw. The tariff squeeze isn't just pushing companies out of the US, it's pulling them into Canada's business-friendly ecosystem. The fortress is turning into an escape hatch. The unintended consequences are real and growing. The US is losing its edge. The most dramatic blow came with Trump's new H-1B visa policy. Overnight, the application fee for high-skilled foreign workers soared from $215 to $100,000 per applicant. For tech companies and startups, this is a financial wall, shutting out the world's best talent. The H-1B program, once the backbone of American innovation, is now out of reach for all but the wealthiest firms. Companies must either abandon critical projects or look elsewhere for talent. Canada's global skills strategy, by contrast, fast-tracks high-skilled workers in as little as 2 weeks. For U.S. firms, opening a Canadian office and hiring globally is now far more practical than navigating America's costly, restrictive system. The U.S. is prioritizing wealth over skill, critics say, and the result is a reverse brain drain. American companies and foreign talent alike are looking north. The talent war is on, and the U.S. is losing. The message is clear. Canada welcomes what America is pushing away. The future of innovation is shifting. As the U.S. embraces volatility, Canada is marketing itself as a haven of stability and opportunity. For companies battered by tariffs and policy whiplash, Canada's rules-based trade and global market access are a lifeline. Canada's open immigration system, especially for skilled workers, is a critical advantage. A U.S. software firm can set up shop in Waterloo or Toronto, tapping into global talent without bureaucratic headaches. Operational costs, including healthcare and some taxes, can be lower in Canada, making the financial case even stronger. Avoiding U.S. tariffs and hiring top talent is now easier north of the border. The Canadian government is actively courting U.S. businesses, offering incentives and a supportive regulatory environment. Real-world examples are mounting automakers shifting supply chains, tech giants expanding Canadian hubs. Canada is no longer a branch plan economy. It's becoming a primary destination for U.S. corporations. The shift is accelerating as more companies seek a secure, prosperous future. Canada's stability is its new superpower. The exodus is real and growing. The North American business map is being redrawn. The corporate flight to Canada is more than a business trend. It's a threat to America's economic future. Every division or factory that moves north takes jobs, tax revenue, and innovation with it. The ripple effects could hollow out entire regions, from suppliers to small businesses. Tariffs and trade wars mean higher prices for consumers, while the loss of investment and skilled jobs slows growth. America's historic edge, its ability to attract the world's best minds, is eroding fast. Restrictive immigration policies threaten to sever the pipeline of talent that drives innovation. The U.S. risks falling behind in critical fields as both talent and capital flow to more welcoming countries. The story of this exodus is a warning. Protectionism and unpredictability have real-world costs. The foundation that made America the world's business leader is being undermined. The choices made today are shaping a very different and less prosperous tomorrow.